We have the phases, which we will need 2 phases to complete a trend. We have the break-off structure. And of course, the last thing that we need is the market making higher highs and higher lows. That's another thing to factor in. Where there is a fake out like this over here, do you see this? A lot of people thought, yes, there was a breakout, but it was actually a fake out. If you look at the bottom, the trend wasn't making higher highs. Do you guys see that? So one of the ways that you can kind of anticipate that it might be a fake out is if the market made lower lows instead of higher highs. Do you guys see that? You know what? Let me remove these drawings. So look at this. We had a swing low. We had a bit of a break of structure. Price came back, and then another break of structure. So a lot of people were actually buying at this point in time. So this is a good example of a fake reversal in the market. You had a controlling swing high over here. Okay. You had a controlling swing high over here, right here. Market broke. You thought, okay, good. There was a break of structure. The market came back down, and then it broke this previous swing, controlling swing high again. And so a lot of people were buying, which is, I mean, which is evident, right? It looks like it's going to break the market. We had a rally-based drop. However, if you look at the market, it never made a higher high. Does that make sense? The market kept on making lows, but there was a breakout. And then what happened? It came back down. So that's one of the ways that you can identify. So do you see why having a criteria is so important? Because let's look at it. In order to identify a trend, you're going to be looking at the phase. Okay, write it down. You are going to look for break of structure. And then you are going to look for, is the market making higher highs or lower lows? Okay. So number one, was there a break of structure? Yes or no? Yes, there was a break of structure. Right here, there was a break. But was the phase complete? Was it 2 phases right here at this break of structure? Yes or no? No. And did it make higher highs or higher lows? It made lower lows, so no. So therefore, the analysis would be, this is a fake out because it didn't meet my criteria. So a lot of people were buying over here because they saw a breakout. And of course, we had candle structure. Was candle structure showing that there was a reversal? Yes. Because we had a drop base rally, but we only met 2 out of the 4. So that would have been, no, it's not a reversal. Does that make sense? So this criteria would have saved you a lot of money, because if you had bought at this break, the market tanked, unless you had a stop loss or something in place, this was taking a lot of people out because they did not have the criteria. It looked like a break. It had the candle structure, but there was no, it didn't show any signs. There was no phase complete, and it continued to make lower lows instead of higher highs. So, and then the market was faked out. But let's keep on going. Does that make sense? Okay, here's another one. Let's take this away. So we had a controlling swing high right over here. So this is fake. This is a fake out. So we had a controlling swing high. Was the bodyguard broken? Break of structure. So let's go over it again. Guys, it's very important to have a criteria. I cannot emphasize this enough. Okay, but this is the criteria for the strategy. We have break of structure, phase. Was it a higher high? Because we're trying to see if it's a reversal. And then number 4 was candle structure. So let's look at it. Let's do it together. Here's a controlling swing high. Did it break the bodyguard? Was there break of structure? Yes. Okay, let's keep on going. Okay. So if I were to go back, we wouldn't take the trade yet because the phases wasn't complete. Okay, so let's keep on going. Okay, so we have break of structure. Phase, was it 2 phases complete? Yes. Was it making higher highs? Yes. And then candle structure, drop, base, rally, drop, base, rally. Yes. Let's see what happens. All 4 of the criteria were met and the market kept going up. Do you see how that works? We had a fake out. It had 2 out of 4. And we had a good run over here. It met 4 out of 4. Let's keep on going. Let's keep on going. I'm gonna take these drawings away. Don't worry, guys. I'll give you the chart as well. But I just want to let you guys know and see how your criteria helps you make a decision. Okay, so let's keep on going. See, still going up. Okay, so we have a drop. Let me just write down the criteria. BOS was the break of structure. We have the phases. We had, was it a higher high or lower low for a downtrend? And then, of course, candle structure. Okay, so you would continue buying. So now that you've had the criteria, we want to keep on entering. So we had a controlling swing low. Okay, here is your breakout. Exactly what I taught you guys. Here's your breakout. You want to enter above your controlling swing low, below your most recent swing high, and you want to enter right here on the basing candle. You enter, market came down and just touched your entry. Awesome. Okay, so you're going to be in the trade. Again, you are going to look for the breakout, your new controlling swing high, below the most recent swing low. This one didn't work out so well because price never came back there, but it's fine. So that's how you do the strategy in an uptrend. You want a number 1 above your controlling swing high, swing low, below your most recent swing high, within the breakout. That's where you will enter. Okay, so that's your entry criteria. This is, am I actually going to get into the trade? So this has to be established first before you go on to this one. Okay, so we want to first determine, is this a good trade? Once we figure out, yes, it's met my criteria, 4 out of 4, now we will enter.